All right, what's up, Tycoon? Super excited for today's video. We are going to be taking a look at NNDM. This is Nano Dimension. And, we're going to look at a few things before we get into the stock chart so you guys can really see, more than just some technical analysis, why this might be a good buy. And then I'm also going to give you guys my buy zones on the chart. So you're going to want to stay tuned to the end of the video. And one last thing, I do viewer request every single week. This one right here has been requested a few times, so that's why I'm making this video for you. And yeah, let's get right into it. The first thing we're going to look at, okay, is this is their CEO speaking on their last earnings call. Okay, we are in a fortunate position thanks to our shareholders' support and trust to be well financed with over 1.35 billion in cash. Okay, so they hold that's just cash money right now. They're holding 1.35 billion in cash. Let's look at how much their actual market cap is. The actual market cap is only 860 million, right? So let's go over here and let's do this. Let's do 0.86, right, divided by 1.3. Boom. And that is 0.66. Okay, so you multiply that by 100, right? And that is a 66 basically, like if the stock was to go up to what the amount of cash on hand it has, it would be around a 60% gain. Okay. So currently, this thing is undervalued by about 60%. All right. Just fundamentally speaking wise, it's trading, the company is trading for less money than it is even worth, right? If they have 1.3 billion just in cash, don't you think that their stock should be worth at least 1.3 billion? That's kind of where I'm going with it. So really small cap company, and some really interesting stuff going on here with that. Now, you know, that's just the cash to the market cap. Now let's go ahead and look at some more things from their earnings report. One thing that I really like in here, okay, is we do not see ourselves in a need to raise more capital for operations in the foreseeable future. Hence, dilution to present shareholders is not expected. Now, what this means is that you're not at risk as a shareholder, right, of a share offering, right, where they're going to go and they're going to sell more shares and dilute the market, right? Dilute the shares, or they're not going to be doing a split or anything like that soon. So that is good news for all of us, as it says, in here in this report. And that's something nice you like to see. Okay, like for instance, like Mullen. Um, Mullen recently, all right, has been really popular and they need to raise cash. Okay, that's one of their big problems. Well, when the stock runs up and rallies super hard, what do? They do a dilution. Okay, they do a share offering. All right, and then they dilute the stocks to the market, and that brings the value down a little bit, because now there's more shares on hand available to purchase, right? So that's something that we're not going to be necessarily having to worry about from NNDM, which is very good for us. Okay. Um, and if we look here, they're just really on track for some really good things. All right. The headline here is their Q4 2021 revenue indicates approximately 200% growth expected in full year 2022 over 2021. Right. So this is a profitable company. They're making profit, and currently they're projected to do 200% revenue. Right. So this is really good stuff that you want to see in a company, and amazing growth numbers, right? I mean, to be able to do 200% year over year is really amazing, and that exceeded, may be exceeding a lot of people's expectations, right? We'll dive into it a little bit more. And in here, they speak on growth. Okay, the CEO message to shareholders. He said, we are on even ahead of plan. The numbers, and not only them, are telling the story, right? So people always say numbers don't lie. Well, the numbers for NNDM have been looking really, really good. Okay, they had a lot of cash. They were able to buy some good companies that were in turn able to help their revenue grow, right? Growth might not be linear, but we will continue to grow steadily while and by continuous build up, expansion, and innovation. And this just means that they don't expect it to go up in a straight line. Okay. Yeah, they're projected to go 200%. But they don't expect that necessarily to be linear and to just go in a straight line, always going and growing 200% every year, right? They've raised a lot of money, um, and they presented the vision of Nano Dimension to dozens institutional investors, many of which became shareholders based on that. There's another part in here that's really interesting that goes to talk about how the owners, right? Our current shareholders construct is made up of less than 100 institutional investors. And now what this means is like, less than 100 big money institutional investors got their pockets in this, right? So it's a very I would say concentrated amount of money that's in there, right? It's not like it's well spread out across everywhere. There's less than 100 institutional investors, right? And then there's many dozens of thousands of retail investors, right? While many members of the first group understand what to expect, the institutions, right, they understand the fundamentals and the financial reports. They're able to read those and understand those and then get in on some of the technology behind it. The second group rarely speaks with us, and their expectations do not necessarily fit what is described above. That is the retail investors, okay? Which is ahead of them as their investment profile is based on short-term risk results profile. This disables any exploitation of our growth opportunity as described above. We respect them as much as we respect any shareholder, but we are not always able to fulfill their short-term wishes. And what does this mean? It means that in 2020, when everything was pumping, all right, and you were a genius for picking any stock. In the year 2021, we haven't seen that, right? We've seen a lot of falling down, a lot of growth, just get wiped off, completely beheaded from the stocks. Okay, let's look at this right here. So it had highs of 1789, and then currently to where it's trading at now, we're down 80%. So this is kind of who they're speaking to right here. They're speaking to these people who bought up here at 15, 16, $17. Like, listen, a lot of these people want short-term gains, and we weren't able to deliver upon that. But our institutional investors and us, we know that things are looking good for the company. And as I explained earlier, they have over 1.35 billion in cash, and they're not really, there's not much risk to the shareholders of them doing of share dilution. Okay, so that's just a couple of the things. You can read more into their earnings report to get more detail, but I really just wanted to highlight the market cap to the cash on hand. And I showed you guys that represented about a 65 increase in the stock price. So let's go up from right here where we're at, up about 60% would bring us up to around $5, right? So I mean, on books, NNDM should be worth about $5. It's currently trading at 346. Now, whether that will be reflected soon or when that ever will be reflected, I can't predict, right? You can't really predict the future, especially with stocks and what a stock's price is going to do. But what I can tell you is that, reasonably, they should be priced around $5, just to be worth what they're worth, cash on hand, right? Because right now they're worth. Imagine having something worth, $1.3 thousand, and you can buy it for $850, right? That's kind of essentially what is going on here. Is you have the opportunity to buy this at 346 and below, and just wait patiently for it to reach $5, and you can sell then. That's a way to like kind of do some fundamental investing, but you'd have to keep track of earnings reports, see how their cash on hand is looking, see what they're spending their money on, if revenues are still increasing, things like that. But we're going to go ahead and dive straight into my technical analysis. Okay, and essentially what I have for you guys here is the weekly chart pulled up, and these are my weekly buy zones. Okay, they're going to be right in between 332 and 134. These are all of the levels that we have not tested since 2019. Okay, we had these amazing run-ups, this rally. All right, we headed into euphoria. Market came into dysphoria. Now we're at 80% drops, 80% loss, and we are retesting these previous levels from before the COVID rally. Right after the COVID crash, there was a big COVID rally, and that's what we're looking at right here. So in my opinion, it's going to come back down, and it already has, to these levels between 332 and 134. That's my original buy zone. Okay, that's where I would say to get in at. If we look at the daily chart, it has came in these zones multiple times. All right, even coming down as low as $3. So you've had a few opportunities. You've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13 opportunities, separate days in the market to buy it below 332 at my weekly buy zone. Now, these are not positions that I would go all 100% in on, right? What you want to do is start to accumulate your position size, below these levels. So maybe buy 10% of your position size, 20% of your position size, because it's always good to have risk management, right? You don't want to be 100% all in on a play, and you're thinking that $3 is the bottom, and for some reason there's bad news in the market, overall sentiment is going down, or let's say the Russia-Ukraine situation gets worse, this thing could drop lower, right? So it's always better to have more money in cash available to purchase if it goes lower versus go all in and hope and pray that it's the bottom. Right now, things do look pretty good. We have been holding $3 as a nice bottom. We've got some nice bullish divergence going on. And I'll go ahead and pull that up on my next chart. I just wanted you to get these levels here. Okay, 332 to 134. We're going to go into the daily chart now. And I want you to keep in mind there's three phases to a reversal. Okay, there's your downtrend, there's your consolidation phase, and then there's your uptrend. And that's what we're looking at right now. Okay, here's the downtrend. Here's our possible box consolidation. I mean, it's not possible. We are in box consolidation right now, but it's possible that once we break above this box consolidation right at 399, so once we start opening and closing on the daily chart and trading above $4, that could signify the uptrend. Okay, because here's our downtrend, here's our box consolidation, and eventually when we break out from this, it'll be either to the upside or to the downside, right? So we'll either break below $3 or we'll break above $4. So those are going to be the key levels that you're going to want to watch and maintain right now is $3 and $4. For right now, we're just consolidating and bouncing in between those zones. And until we start to open and close above those levels, we don't have any future indication of the direction, right? So, that's why I'm saying those are basically my weekly divergence buy zones, on the weekly chart. And then on the daily chart, you just need to monitor these levels. Volume is still relatively low. Okay, with this line right here represents the volume average. We do see that the volume average spiked 2 times, right up to the average or slightly above the average. And those were both red days. So that's something to consider on the volume side is, okay, well, volume is picking up on the sellers, right? Where I'm noticing that there's more sellers in here pertaining to the volume in here recently, but in the past, there's much more days where the volume was green and we were exceeding the volume average, right? And those were the days that initially led us into the rally, and those were on days when we were closer to the price level of 3. So I'm just noticing here from the chart that, once we get towards 3, and the closer we get to 3, the higher the buy volume, right? And the closer we get to 4, the higher the sell volume. Okay. So that's something that we want to monitor. Now, the sell volume at 4 has not exceeded the buy volume at 3. So that just shows us that, hey, there's less sellers at $4 a share than there is in buyers at $3 a share, right? So there's much more buyers at $3 a share than there is sellers at $4 a share. Now, these lower lows and higher lows right here, on my RSI, I have higher lows, and on the stock price here, I have lower highs written. What this means is this is a form of bullish divergence, and I can go ahead and draw a little bit of a trend line, but essentially, from right here, okay, to right here, we'll make this a little bit bigger so you can see. All right, that's a clear downtrend. All right, we're going down. All right, and from here, right to here, that's a downtrend as well. All right, so we have 2 downtrends, and we haven't been able to make a lower low since then. We've come back down and tested this level, but we haven't made a lower low. But essentially, you have a lower highs here, you have lower lows, so in a downtrend. But the RSI, we have higher lows and higher highs. Okay, so here's our highs, and we're making higher highs here on the RSI. Okay, we're going up in an uptrend, right? And then on the RSI again, we're making lower highs, or I'm sorry, higher lows now. So, here's our trend here on the stock, on the RSI, and we're going up. Okay, low, higher low, higher low, higher low, right? So that's what's known as bullish divergence. And that's really something that I'm looking at to see if it is going to help us keep this bullish momentum and break above this box consolidation, right? Because for now we're consolidating. Essentially, what I would like to see is I would like to see the RSI pull back, and I want to see a bounce off of the bullish divergence trend line. So we want to see a bounce right in here in this level on our trend line. In between 30 and 40 on the RSI is going to be a potential bounce zone for NNDM, and we want to see it bounce there and, you know, trade higher. Okay. Now, if we zoom in a little bit more, just so you guys can see, you know, this is our 50 simple moving average. This is our 100 simple moving average. Currently, we're facing both of them as resistance. Okay, we were able to trade above the 50 SMA and use it as a support level. We bounced off of there nicely. Then we got rejected at our 100 SMA, the red line right here. So after we got rejected from there, it tried to find some support at the 50 SMA, and now we're trading below the 50 SMA. Why do I have these on the chart? These are things that, you know, technical indicators that, you know, big money, big institutions use, that retail traders use, that everyone uses. So it's good to have these on here and know possible rejection zones. Okay, well, hey, you know, we're most likely going to get rejected around that 100 SMA. So, you know, may want to take some profits there. And then we did pull back, and you want to see it catch support at the 50 SMA, but we broke support there. We're trading below. So the next thing that we're going to be needing to do, you know, is flip this 50 SMA from resistance back to support, right? So that's essentially what I'm looking for. If we don't, and that stays as a resistance level, we could come all the way back down to $3. And, you know, and then we need to find support at $3 or $3. You know, we could go below $3 if we don't find any support there. All right. So thank you guys for watching. I hope you guys appreciate it. Let me know, you know, what tickers, what stocks you guys want me to analyze. I do crypto as well. If you guys want to, you know, have me break down some cryptocurrencies, any tokens, altcoins, things like that you might be looking at, just let me know in the comments below, and I'll be happy to do that for you. Okay.